Interesting week in the markets. We had comments from 3 or 4 key figures: the Chancellor, the regulator, the Governor, and indeed the author. So let's start with the Chancellor, who said at the Mansion House speech he would bring greater regulation and greater oversight to the FX markets. Not entirely clear what he means by that, and the panel he's put together will take a year to come up with their findings. That's a bit disappointing. Over $1 quadrillion worth of FX will have been traded by the time the panel comes up with its findings. That said, as participants in the market, we should encourage greater openness and transparency, and hopefully better regulation will restore the trust and the faith in these markets. Over 1 million people are employed in financial services in the UK. So therefore a strong economy needs a robust, resilient marketplace and FX market, as indeed the Chancellor alluded to. The second key figure was Mr. Wheatley, the Chief Executive of the FCA, who made some pretty cool statements and controlled statements regarding potential regulation of high-frequency trading. There'll be no knee-jerk, he said. It requires cool heads as they analyse what is high-frequency trading and the impact in the markets. It's not all about the author, Michael Lewis. His main job was to sell books. He sold a lot of them with the book that everyone's read. But at the end of the day, it's a very good read. It reads like a novel. But the complexities of algorithmic execution and high-frequency trading go far beyond what you can capture in 300 pages of semi-fiction. So yes, we know there will be regulation and greater oversight throughout the market, including high-frequency trading, but it's not the time to make knee-jerk reactions or indeed throw all high-frequency trading into the same bucket. So again, we wait to see what comes out of the FCA from there. Most recently, we had the Governor of the Bank of England, Mr. Carney, suggesting that the UK will be the first to raise rates, perhaps indicating that the UK has outpaced the Eurozone and the US in terms of their economic recovery. That's good. It's brought some volatility back to the markets. We've seen cable trade up at 170 today, and also a bit of a knock-on effect on euro dollar and euro sterling. A better week all round for the markets. Perhaps June and the summer could be better than we expected. I stood here 2 weeks ago saying that sell in May and go away. And we couldn't expect volatility to return until maybe Q3, Q4. Perhaps you're going to start to see interest rates moving around in the Eurozone, in the UK and the US. So it could be interesting times ahead.